Hello traders and welcome back. So we are one step closer to trading live, trading the markets live. Okay, using all the things we've learned right from module 1 to this point to trade the market and make as much profit as we can, right? But there is one aspect of trading which we have to look at. Okay, so this is called trading psychology. Trading psychology is basically your emotional state or your psychological state as a trader or while trading. Okay, so this is arguably the most important part of trading. Okay, as a trader, but unfortunately, we can't dedicate so much to the topic of trading psychology because this is not a psychology class, right? Yeah. So we've only dedicated one module or one video to trading psychology. And I think we'll pretty much do justice to the topic of trading psychology in this video. Okay, so trading psychology is the most important part of forex trading because money is a very emotional thing, and your emotions tend to completely come in play when you trade the forex market with real money. Okay, so money is a very emotional thing because it's used to do very emotional things, if that makes sense. You use money to take care of your bills, you use money to buy wealth, you use money to purchase your future, right? You use money to build your future, okay? To purchase wealth, to build wealth, okay, to take care of your family, to pay your school fees, to do a whole lot of things. You use money, and therefore money is very much valued. Okay, very much valued. And where your value is, there your mind will be. Therefore, your psychology or your emotions will also come in play when you trade with real money. Believe you me, we've placed a whole lot of trades on this demo account, and you probably have placed some trades on your demo account also. And I'm sure you just placed it without even feeling anything. Okay, it's nothing, just a trade. Just buy, we just sell, right? But believe you me, when you start trading with real money, when you start trading with your real hard-earned money or an investor's money, the whole scenario will be different. Trading with real money is totally different from trading with paper money. Why did I say so? Not that the market conditions are different. The market conditions are the same, only that the emotions make everything else different. Okay? The emotions are what make the difference. So trading with live money is very different, very emotional, and hence this covers a large aspect of your success as forex traders, right? So the next point is your emotions can prevent you from doing the right things you've learned, cause you to do the wrong things, and cause you to do what is logically wrong. So when you are emotional, when your emotions are high, logic does not work on you any longer. Okay, you only act based on impulse, based on your emotions, based on what you are feeling. Okay, so forex trading is not about what we feel. Okay, you don't just feel that the market will go up and then you buy. You don't just feel that the market will go down and then you sell. We don't feel in forex trading. We actually see and analyze. Okay, logic plays a vital role in forex trading. Therefore, our emotions will mess us up. So you have to try as much as possible to be totally emotionally attached to your trades. And funny enough, this is the most difficult thing in forex trading. This is why many people keep losing because emotions are just a serious thing. Okay, they're just very serious thing. They affect our trading very well, immensely. Cannot be overemphasized. Yeah, so they keep us from doing what is logically right. They just make us do wrong things. Okay, you totally forget what you've learned. Okay, when your emotions are at risk, you totally forget what you've learned and you just do things based on emotions. That's the wrong way to trade. And then your psychology as a trader accounts for about 50% of what it takes for you to be a successful trader. Yeah, this is very true. It accounts for 60 or more percent, 50 or more percent. It can be even more. Okay, some analysts say it's more than 50%. Because if your psychology is not right, you won't take the trades. If your psychology is not right, you can't follow your strategy. Okay, if your discipline is not right, you can't follow your strategy. If your psychology is not right, you just lose hope after a losing streak. And of course, losing streaks are a normal thing in forex trading. Okay, you won't always win, and sometimes you might have multiple losses in a stretch. Sometimes you might have multiple wins in a stretch, but that doesn't mean your strategy is not good. It's just probability. It's just probability playing out, right? So your psychology as a trader accounts for about 50% of what it takes for you to be a successful trader, right? So the more robot-like you can be, okay. Why I said robot-like is because robots do not have emotions, right? They just follow instructions. So the more like a robot you are, the more it will be for you to achieve success in this game. Okay, so you can create rules to help you keep your emotions at check. You can create rules to help you keep your emotions at check. These rules can be part of your trading plan. Remember, I spoke about a rule when we were talking about trading plans, right? A rule that after 15% loss, I stay away from the market for the remaining week. Okay, for the remaining days in the week, and then resume the next week. Okay, so that's an example of rules that can help you keep your emotions at check. Because if you are emotional, it will be best that you just stay away from the chart. Okay, because a lot of things are happening. You are angry, you are frustrated. You get to the point. It's just better that you stay away from the charts for the rest of the day, for the rest of the week, to regain yourself, and to regain your strategy, right? Okay, so this point says common emotional factors that affect us as traders include fear, greed, frustration, hope, and lack of discipline. Okay, so these are very common emotional factors that affect forex traders. Okay, like fear. Okay, well, for example, the fear to take action. Okay, maybe you've had some losing streaks and you are scared, you're losing money, and you now see a good signal, but now you are scared to take action. You are scared to enter the trade. Okay, just because you had some losing trades and you are scared to enter the trade. So you see, fear is a very bad thing in forex trading, and you are going to come across all of these things. Believe you me, as you proceed as forex traders, if you really are going to take this serious, okay, you're going to come across a lot of these things. Fear, very common. I can remember the first time I started trading live. Okay, my hands were literally shaking. Okay, I couldn't click the mouse because I was scared. I wasn't even scared because I blew an account. I was just scared because I know, wow, this is real money now. This is real money. This is not paper money. I was doubling demo accounts. I was doing crazy things on demo account. But when I came onto the live account, I was scared. And that's the emotions. Okay, but over time, I was able to build my emotional confidence. I was able to build my character as a trader, and here am I, right? Yeah, so fear is the first one. Now, greed is another point. Greed is another point. Greed will make you double your lot sizes, double your risk, because you want to make more money without realizing that you're actually putting your account in higher risk. Because what if the trades go against you? You'll be losing money. Okay, greed will make you enter so many positions. Greed will make you target more profits than the market is designed to give you. Okay, so there are markets that when you see, you know that, wow, this market cannot give me more than 50 pips, or this market cannot give me more than 30 pips. But because of greed, you've taken your take profit to 80 pips, and you have sworn never to take profits except it hits your take profit order, right? So that's greed. Greed can mess you up. So just stick to your strategy and be patient and do it over and over again, and you'll be making money sooner than you know it. Now we have frustration. Frustration is something that happens to traders very well also. Okay, there could be a scenario where you are frustrated because you've lost a lot of money, you've lost plenty trades. Maybe let me see if I can get an example. Okay, maybe you came to this point. Okay, maybe you came to this point. Maybe maybe the market was at a point like this. Okay, and then you saw this, and because you saw this resistance level, okay, you saw this one here and this one here, and then you just decided to buy here. Okay, you just decided to buy here, thinking the market will go up, but the market still continued going down. It went down and closed you at a loss before climbing up to close here, and then continued going down. So and then started going up again. Okay, you started going up again, you started going up, and then you were here and you saw that wow, this market will go up, and then you now bought here. But what happened? The market just started going down again, and took you out on your profit, and then started going up again in your initial direction, right? So things like this can get you frustrated and can get you very frustrated. So you might just end up deciding that, okay, you know what, when it comes here, when it gets here, I'm just going to buy. Okay, I'm just going to buy. So it came here and you buy. And for that reason, since it kept stopping me out, and then continued going in my favor, I'm going to buy. And then what will happen is I won't use a stop loss. I won't use a stop loss, right? So you just buy and then you don't use a stop loss. And maybe you were doing something. When you came down, the market was already here. Okay, this is monthly chart, right? But okay, let's just assume this is 5 minutes chart or something. So when you came, you just saw the market here, and 50% of your capital is gone already. So you see, because of frustration, you were frustrated because of the losing trades you had, and you just took stupid decisions. Okay, so that's one of the things that frustrations can do to you. Can make you just take stupid decisions. Okay, in forex trading, we need to have our head straight, we need to think logically, and we need to act logically. That's it. Okay, that's why some people just prefer to give all these instructions to robots, and robots to trade for them. But I still believe that humans can be better traders than robots. So frustration is one of them. And then the next one is hope. Hope is a good thing, right? But in forex trading, hope is a bad thing. Believe you me, hope is a bad thing in forex trading. You shouldn't have hope. Just trade on what you it acts based on what you see. Do not have hope. It's a crime to have hope in forex trading. What do I mean? Okay, let's say you were buying the market. And you started making profit. You started making some profit. You were buying the market and you started making some profit, and then suddenly the market started going against you, right? Started going against you. From profit, you now got to break even. From break even, you now got to loss, and it's trying to get to your stop loss, almost touching your stop loss, and you said, wow, you hope that the market you are very sure that the market will continue rallying up because it's on an uptrend, right? It's on an uptrend. So why use the stop loss? You now remove your stop loss and you just allow it to float like that without a stop loss, because you are hoping that the market will reverse and go in your direction. But unfortunately for you, my friend, the market never went in your direction. Rather, it kept on going against you. And before you knew it, 80% of your capital is gone. 80% of your capital is gone and your account is almost blown. Did you see what hope did to you? Hope made you hopeless. So never have hope in forex trading. Just follow the rules, follow your strategy, and you will be good to go. Now the last one here is lack of discipline. Of course, lack of discipline. If you don't have enough discipline, you won't be able to follow your strategy. You won't be able to follow your rules. So you have to have that discipline. You have to have that discipline and follow your rules. So that's the only way you can succeed in forex trading. Forex trading is a game of discipline. You have to discipline yourself and discipline yourself again and again. So I have this chart here that gives us percentages of what needs to be in place for us to be successful as forex traders, right? So the first one here is your trading psychology, which is 50%, 50%, 50%, 50 freaking percent. Your trading psychology. So you have to get it right psychologically for you to succeed in the market. Now we have strategy, which is 15%. Strategy is 15%. So strategy involves all your technical analysis, all your rules, all what we've been learning all this while, all is in your strategy. And then your position sizing, of course, you know what that means. It means your risk management, your lot sizing, your money management, your trade management, and so on and so forth. So that's your position sizing. So all of these, if you get them right, you're very much sure of being a successful forex trader. Okay. Now, common emotional mistakes by losing forex traders, by traders who are constantly losing. Okay, I'm sure you've heard that 95% of traders are losers. Okay, by losers I mean they lose money consistently in the market. Okay, so just about 5% of traders globally win money. Okay, so if you follow all these rules, you'll be among the 5%. But if you don't, you have higher chances of being among the 95% of unsuccessful traders. Okay, so here are some common emotional mistakes by traders. The first one is they get too greedy and increase their lot sizes in order to make more money without realizing they are increasing their risk. Okay, we mentioned this in the previous slide. So by getting too greedy, traders tend to get themselves in trouble. So do not risk too much. Just risk as much as you can afford to. Okay. Now the second point says they rush into new trades after some losses in order to win back their lost money quickly. So they are eager to enter trades. They are eager. You are going to come across all of these things. Believe you me. Just keep trading and see. But I believe with time you develop the skill and move on to become better traders, right? Yeah. So do not rush into trades. Do not be eager to take trades. Do not chase the market. Allow the market to come to you. Allow the setups to happen, and then you enter. Okay. It's better to not trade than to trade and lose money. Okay. It's better to not trade. You should not be eager to trade. Too eager to trade. Okay. Sometimes some days I don't trade. Yeah, because I'm waiting for the market to align in my direction, right? So it's very important not to rush into trades, okay? And then they refuse to close losing trades or use stop losses with the hope that the market will turn around in their favor. So this is the hope point I made previously. So you have to remove hope from the market and trade based on rules, based on logic. Yeah. And so the fourth point here is the fear to profits already gained. Sorry, I think I made a mistake here. The fear to profits already gained, therefore close trades with small profits instead of the fear to lose profits already gained. Sorry, this should be lose profits already gained. Okay, so the fear to lose profits already gained, therefore close their trades with small profits instead of allowing the trades to hit their target based on their strategy rules. Okay, so some traders, after experiencing streaks of losing, they just enter trade and maybe the trade is moving in their direction now. They just see little money and they are just eager to close the trade because they don't want to lose it again. Okay, so you just have to be emotionally unattached to your trades. You can just place the trade and go somewhere, right? Place the trade and go somewhere and come back later. Okay, so they fear to take the next high probability trades because they lost a couple of trades previously. Just like I said before, they fear to take high probability trades because they lost a couple of trades previously. So these are emotional mistakes, like I said. So they fail to stick consistently to a specific risk per trade. So you have to consistently stick to a specific risk per trade, right? So that's another mistake losing traders make. So they focus on how much money they make or lose instead of just following their strategy to see how it plays out in the long run. And then they keep changing and modifying their strategies after they've experienced some series of losses. Okay, so after 5 losses, after 6 losses, they just maybe add another indicator, change the whole strategy. They jump from this strategy to another strategy, from that strategy to another strategy, because they just experience some losses. While, of course, we all know that losses are part of the game. Okay, losses are part of the game. Sometimes you lose multiple, sometimes you make multiple. Okay, just stick to the strategy, and all will be well. And then they allow themselves to be emotionally affected by losing trades. Okay, when you accept the fact that losing is part of the game, you will detach yourself emotionally from your losing trades. Okay, when you lose, fine, you lost 1 hour, fine. I'm going to target 2 hours the next time. You lost 1 hour, fine. Okay, you lost 1 hour again. Okay, fine. Let's try the next time. And then who knows? The next time you'll be making 2 hours, you'll be making 3 hours, and you're making money, right? You've probably regained all what you've lost, and in the next one trade, you've regained all the 3 losses you got within the next one trade. And that's just how trading is, okay? Losses are part of trading. Then the last point is they always want to have revenge on the market. Okay, so some people, I used to fall into this trap before. You lose, and then you just want to revenge the market. You're angry, you want to revenge the market. You start increasing your lot sizes, you start scalping, you start doing all sort of things because you want to regain your money fast. Like the market has wounded you, you want to regain, you want to wound the market back. Market is your friend. Of course, it can be your enemy also if you don't stick to the rules, but the market is your friend. You don't have to revenge the market. You just have to allow the market to come to you patiently. Patience is very important in this game, guys. Yeah, so allow the market to come to you, and you avoid all these emotional mistakes. Now, some emotional trading advice. Okay, so these are just a few advice which I've put together for you in order to help you emotionally. Okay, help you emotionally. So the first one is focus on being consistent with your strategy instead of always winning your trades, because you can't always win every trade, but consistently following your strategy will ensure you make money in the long run. Okay, consistently following your strategy will make sure you make money in the long run. You can't win all the trades. You can't. Even the best in the game do not win all their trades. They have losers from time to time. Okay, so you can't win all. You can't win all. That's just it. Let's focus on being consistent and following your strategy. Okay, because you can't win all. So the second point is always take action when you see a high probability setup or signal. So always take action when you see a high probability setup. Okay, always take action. And then we have accept losses as part of the game of trading. So please accept losses because they are part of the game. All you need to do is to limit them. Okay, but they are part of the game. When they come, just accept them and move on. Okay, accept them, but keep them as low as possible. Okay, and then always have a maximum amount to lose a day. And when you hit that amount in losses, close the computer or your phone for the day and do something else. Okay, so if you hit your maximum daily loss, just close the computer and do something else, because your emotions will start messing with you at that point. Okay, so, and then this point says only trade with money you can afford to lose. Very important, guys. This point has made a lot of people go into trouble. I know a lot of people who are in serious trouble because they borrowed money to trade. I know people personally who are in deep shit because of borrowed money to trade. Okay, why would you borrow money to trade? Just develop the skill, and later on investors will come. Just develop the skill. If getting money is your problem, just develop the skill, and later on the investors will come. Okay, so do not borrow money to trade. Do not borrow money to trade. Okay, always trade with money you can afford to lose. Okay, yeah. So the second to the last point states that be patient and only wait for high probability setups. Be patient and only wait for high probability setups. Be patient and only wait for high probability setups. Okay, and then finally, do not dwell on your mistakes. Learn from them and move on. Do not dwell on your mistakes. Learn from them and move on. So mistakes are inevitable. Mistakes are inevitable. Everybody makes mistakes. Everybody makes mistakes. Even the best do make mistakes. I've made a lot of mistakes in this game and I'm still standing, right? So you have to just learn from your mistakes and move on. Learn from your mistakes and move on. Learn from your mistakes and move on. So these are the pieces of advice I can give to you going forward, so as to help you accelerate your trading, so as to help you emotionally in controlling your emotions. Okay. Now we've come to the end of this video and of course of this module on trading psychology. I hope you've learned a lot. I advise that you try to train your emotions. Okay, try to have your emotions in check while you trade. If you're losing it, just stay away from the market. Okay. So in the next module, we'll be trading the market live. Okay, with real money. So hope to see you in the next. Bye.